Welcome to ISE's FX Options Weekly Outlook, a weekly outlook on the US dollar versus the major currencies, hosted by Jason Ayres, a top industry instructor and founder of OptionSource.net. Learn to trade your views on the strength or weakness of the US dollar.
Well, hi there and welcome to the ISE FX Options Weekly Outlook for August 10th, 2009. This is Jason Ayres of OptionSource.net. As always, let's take a quick look at the weekly US dollar index. It's a great way to gain perspective as to how the US dollar has been trading against a basket of currencies. As you can see here, the US dollar rallied strong against most major currencies towards the end of the week, and after a break below 78, we now see the index trading back within a key support level. Now, although this bodes well for the US dollar bulls, the 79.80 focal zone remains an important overhead resistance, and a follow-through on Monday will further support the probability of a strengthening US dollar. A reversal earlier on in the week will lend credibility to a drop deeper into that 76-77 focal zone. Now, a quick look at our daily snapshot reflects the Thursday-Friday dollar rally and the importance of that 79 pivot point to substantiate any continuation to the upside. Contributing moderately to the index strengthening was the US dollar's move higher against the Canadian dollar. The 108 level remains an important focal zone as the CDD retraced back into test this range as resistance. We are looking at the 109 level as being an important pivot point, with a break above opening the window for a move to the 111-112 focal zone as a realistic objective. Failure here reopens the window for a move back down into this 103-104 box. Perhaps the most surprising dollar rally came against the yen, as seen here in the ISE FX options pair value YUK. What appeared last week as a bearish reversal candle lacked follow-through with a failure to break below this 94.5 pivot point. Now, after some consolidation, the YUK broke clean through the 96-97 focal zone, where it now appears to be heading towards a test of the 98-99 range. After such a robust move, a pullback is a high probability, which will likely try to test the 96-97 level as support. Any upside follow-through brings the 100 to 101 level into play as a logical upside target. Well, after spending some time below the 70 to 70.5 focal zone, the EUI, the US versus the Euro, rallied back into this range on Friday. Now, although this strong reversal appears to be a bullish sign of the US dollar against the Euro, we are looking at the 71 to 71.5 range as an important overhead resistance. Now, if the EUI reverses out of this 70 to 70.5 focal zone on Monday, we'll be looking for a test of this 68 to 68.5 box. Until the pair value breaks this upper trend line, we are suspect of any rally. The BPX, the US versus the pound, retraced back up to test a key resistance level after breaking below our 59.5-60 support. Any follow-through of this bullish US dollar move is likely to meet with resistance at the 60.5 to 61 focal zone, and until we see this level breached, we are also suspect of this rally. Should the pair value reject out of the current zone, we will be looking for a continuation to the downside into our 57.58 box. Well, we saw a nice follow-through of the bear flag identified on the AUX as the US dollar continued to weaken against the Australian dollar. With a test of the upper zone of our 117-118 box completed, it is not unrealistic to anticipate a retracement back up to test the 121-122 focal zone as resistance. Now, any bearish reversal with a break below 118 opens the window for a play down into our 114-115 box as a near-term target. Let's take a look at a few of our key points. First of all, the US dollar reversed at the end of the week to close positive. The 79.80 zone remains a strong overhead resistance. Unless we see a break above this key level, the window is still open for continued dollar weakness. The CDD is testing the 108 now as resistance after a mild rally last week. Unless we see a break of 109, we cannot rule out further weakness. The YUK closed the week strong, and despite last week's technical observations, exceeded our near-term upside target. We should see a slight pullback this week. Look for the 98-99 focal zone to play an important role as resistance. A break through this zone could be the catalyst for a bigger picture rally. The EUI broke our 70 support but finished the week back inside this level. 71 to 71.5 still remains a strong overhead resistance, and until we see this level breached, we are not ruling out a continuation to the downside. The BPX broke support but reversed midweek. We are now seeing a test of resistance at the 59.5 to 60 zone. A rejection here adds further credibility to a test of our 57.58 box. And finally, the AUX tested the upper range of our 117-118 target and has bounced moderately. We may see a test of 121. However, a break below 118 opens the window for a move towards 114. This has been your ISE FX Options Weekly Outlook for August 10th, 2009. I'm Jason Ayres of OptionsSource.net. Thanks for joining me here this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For more information about Jason Ayres and to sign up for free FX Options trade alerts, just visit www.optionsource.net. To learn more about ISE FX Options, including our weekly webinar series, visit us at www.ise.com/fx. ISE FX Options can easily be traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in US dollars and have a European-style exercise.